What's up, guys? It's Friday the 23rd, and it's been one hell of a crazy week as far as the market is concerned. It's really, really difficult to really even break down what's causing a lot of the movement. And the best we can really ascertain is there's just a lot of capital coming out and sitting on the sidelines, not necessarily going in. You're seeing the stocks taking a massive beating. You're seeing the bonds take a beating, the Fed raising rates. There's conflict as to whether or not it's the right thing to do, the wrong thing to do. Is it going to create a need to start cutting rates later quickly? Hard to say. There's just so much of this that's not territory we've ever been in, and we're getting into territory as far as the mortgage-backed securities is concerned that we don't even have any charts to show where we're at. We can't go back far enough in the charts. So I've got the paid services I use to be able to look at the charts and go back as far as I can. Even those guys are commenting they don't have access to things to go far enough back to see what was support or resistance. So we're kind of guessing at things right now and seeing guessing what traders are probably going to do. The other thing that we're guessing here is money's going to sit on the side till there's some sort of definitive understanding of what the market's doing and what's going to end up happening with there's too many black swans that we're seeing out there. Then we're also just trying to gauge whether or not we want those traders want to put their money into bonds, they're going to put it into stocks, going to put it somewhere else. I think they're holding a lot of it in cash. At least that's the consensus. So let's take a look at the charts, and I can show you what I'm talking about as far as what's going on out there in the market itself. So these lines here I'm putting in here as far as resistance, that would be or support. So resistance would be harder to go above that as far as the trading is concerned, because that's where a lot of your sell orders might be. And then here at the base is where it would be a lot of those buy orders. And then, of course, there's going to be, depending upon news, a lot of back and forth within that channel, which we've seen these channels that were formed before that I'd shown. Now, I looked at multiple different sizes of where they were claiming these supports were going to be and these resistance might be, and every single one of them is different. So it just goes to show they're spitballing from what I can tell, because they have no idea, because they don't have the charts to go back and show what's happening. I'm kind of guessing based on what they're showing me. So I'm taking 3 or 4 different angles and then, kind of creating my own form here. So that being the situation, we're going to ride this out and see where it goes and pray that there's something that's going to put more capital back into the mortgage-backed securities. What we have here is a lot of fear in the market, where people are, of course, hoarding what cash that they've got. Hoarding is probably a very, very strong word for that. But there's going to be something, hopefully, that's going to push money back in there, bring these rates down a little bit, give us a little bit of reprieve. But as you can see here, just yesterday, massive beating. The Fed raised rates here. It was a good day. Everything returned back. But then a lot of things sunk in. A lot of other data came out, and they're just a massive sell-off. I think people are just collecting and stashing cash for the next move. So that's where we sit at the moment. If you got something, you feel comfortable with it, lock it. It's going to be higher. We're in the 7s, guys. It's the way things are. And since that's the case, be ready for that. Run your numbers. Start looking out 3, 4, 5 years on those rent raises and see how that covers it, because you're not going to see those cash-on-cash returns that you're going to like to see in the first 1 to 3 years. It's just the way it's going to be. But that means other people are walking away from the opportunities. You got to look at all the angles, all the reasons why you get into this. Take advantage of the fact that people are not getting in the market the way they should be. Step forward into this and take advantage of things while others are stepping back and not sure what they should be doing. If you have any questions or any, unsure of what's going on, reach out to us, schedule a time. Myself, Scotty, whoever else will jump on the line with you. We'll talk it through, and we'll hopefully get to a point where you're comfortable either stepping forward or making a change and go to something else. But don't ever just step back and not do anything. You want to continue to weave through the market and find the deal that works for you. Talk to you again on Tuesday.